Welcome to the Titans of Industry show. I am extremely pleased to speak with a friend of mine, LYNETTE ZANG, out of ITM Trading, a precious metals expert, a monetary historian, in my opinion, and a great authority on everything that's going on right now in the precious metals sector. LYNETTE, first of all, welcome to the show.
Well, thank you so much, Lior. It's really good to be here again. You are definitely one of my favorites.
Well, I appreciate that. I do want to ask you, first and foremost, are we in a bear market in gold and silver?
Well, okay, here's the challenge that I have with that, because I do not treat gold and silver as a trading vehicle. For me, that's what you use paper for. It's cheaper and easier to move in and out of it. But what I also see when I'm looking at the long-term charts on gold and silver, even though the spot markets are a paper contract product, that I am seeing a double cup formation occurring in it, which is really quite rare. I mean, frankly, in my entire career, I've only seen that pattern in the gold and silver spot, well, not silver, but in the gold spot and the gold collectible numismatic areas. And what that tells me, what a cup formation is, it's what you can see it. It looks like it forms the bottom of a cup. And it's an accumulation pattern that tells you that smart money has recognized a severely undervalued circumstance, and they have begun to very quietly accumulate. You'll typically hear things like that question you asked me, is this a bear market? Or people say, oh, gold is the worst thing, silver is the worst thing, I'll never do it again. So if you're just out there listening and you want to get an indication of where we are, what you want to hear to know that you might want to look at the graphs and the charts. What is the sentiment? And when it's really negative like that, that's a really good time. And my bet is, this won't necessarily be true every time, but it is in this case. My bet is that when you look at the graphs, you're going to see that cup formation. That's when you want to accumulate. That's when you want to buy.
Well, that's interesting, and that's obviously technical analysis, and you can share with us a bit more about that during the show. I want to ask you, because this is important, and you talked about this just now, but can you elaborate on what do you mean when you say gold and silver are not trading vehicles? The reason I say that is because my personal strategy, I think I even shared this on your show, is that I took 24 months of my lifestyle burn rate, my monthly expenses, and I multiplied them by 24, so 2 years worth of my living expenses and my lifestyle burn rate, and I converted them into precious metals in physical form, and that is essentially my position. That is the way I hedge myself and my family life against any currency reset, geopolitical tension, etc., with physical gold and silver. So to me, no, it is not a trading vehicle. It is only how many ounces do I have compared to the lifestyle that I want to live. And I want to ask you, is this the way you look at it? How do you look at it? Would be a better question. And do you think that gold and silver are important, or is gold more important today than silver because it is a much more liquid market and robust market, or are you viewing them in the same way?
Well, those are all really great questions. And so in many ways, the way that you've established to sustain your current standard of living for that block of time is a really good way to approach it. I'm a bit more nuanced, and here, look, I've been studying currency since 1987, and I'm also an artist, and for me, I recognize patterns. I'm all about patterns because that really gives you guidance in where you are and what the truth is. Then you use some other things to either, support what you're looking at or to know that it's not true, what you're looking at. So first of all, I'm going to say that is definitely a good way to do it, because what gold and silver do in terms of a currency reset is the most important function is to hold your purchasing power. And we've seen it historically and currently over 4,800 times where that's exactly what it's done. And that is why, for me, it's not a trade. Number two, what I absolutely know is that a rising gold price, because gold is the primary currency metal, it is against which other fiat currencies are revalued in the reset. So you need both gold and silver, but it depends on what you are trying to accomplish, what that function is. Here at ITM, and actually before I got to ITM, I had actually developed a strategy for myself with using all of the different asset classes, because I was a stockbroker and I've been a banker. So, I probably should let people know, what my background is. So I've been in these markets on some level, and my uncle was a major dealer in tangibles, high-end tangibles. So I've been in these markets on some level since 1964. And there are lots and lots of lessons that I've learned. But along the way, and actually culminating after my studies of currencies that began in 1987, and I saw what a currency life cycle, the pattern of a currency life cycle. And because it's happened so many times historically, there is so much data that you can check back to confirm or deny the patterns. And so I've developed a strategy that we execute here at ITM. It's really what makes us different than anybody else, based upon those repeatable patterns. Because while I can't guarantee what's going to happen tomorrow, that's certainly way beyond my little bitty control. My feeling is if something's happened 100% of the time historically, and we're experiencing the exact same thing again, that in Venezuela, in lots of countries right now, in the U.S. here, and different parts of the world that have not yet entered that hyperinflationary phase, we can look to what's happening in different parts of the world right now, Turkey, other places, and see how gold and silver behaves in terms of their fiat currency. That's why when you say, is it in a bear market? I don't really care. I just keep accumulating because I'm positioning for the required global financial system reset. So for me, I know that's kind of windy, but let me try and break it down a little bit easier now. Having said all that stuff, there are basically three things that I want to accomplish right now. Number one, like what you've done, I want to be in a position to sustain my current standard of living as we enter the part of the phase where the currency collapses, like we're seeing around the world right now. And that's what you've done. But the problem with only doing that piece is that you will be using a principle. And if you use up all of your principal to get through that piece, you will not have any principal to accumulate assets with. Because what happens is those other income producing assets or real assets lose their fiat money inflation in relation to gold. And again, this is something that, I'm not just talking history, although you can see it there, but you can look at a number of places in the world and you'll see that in terms of that currency, gold and silver explodes upward, though gold typically, there's a range, but gold and silver upwards and those other assets downwards. So what you also need to do is accumulate a certain level of gold. Again, it's got to go back to your goals. so that you have money, you actually have wealth to buy those other assets when they are dirt cheap like gold is right now. So I want to sustain my standard of living. I want to get into a position where I can accumulate cheap assets when I see that cup formation. Then you check valuations and a few other things. That would be when you would start to accumulate that. And then the final thing that I want to be able to do is have some real money to convert into the new currency once they have burned off and completed all the debt, completed transition. So, go ahead.
No, please go on.
Well, okay, I love questions though, because I gave you a mouthful, but that is really what makes us different here, is because these are the things that we look at. So it's not just slapping you into some gold or some silver. It is, what are your goals? What are your circumstances? And what do you have to work with? Do you have enough to work with it all at once? Awesome. What do you keep in the system? What do we have to protect? It's a really comprehensive and organic view, and it isn't it is a long-term relationship, but it isn't just buying gold and silver and that's it. A lot of it is knowing how and when to convert. With everything that's been going on in the markets and the level of leverage and the level of debts and the conversion of real assets like real estate into these products that are then sold off, but they're so highly leveraged. Look, in Japan, in the early 90s, commercial real estate dropped 95%.
That is a wild number.
Right. But so now you've got gold going up, and with the barterable part, I use silver too. For me, the silver and gold in small fractional form that are just basically all I'm really looking to do is to protect my current purchasing power, because what I'm trying to do is just sustain my standard of living. But, and it isn't that you can't do everything with any gold or silver, because you can. Gold and silver in any form, even Aunt Bessie's silverware. And no, I actually never had an Aunt Bessie. Somebody asked me that because I always use it. I don't know why. But, having sterling silverware, that's still monetary at its base. It's just that it would take an awful lot of it to buy the Senate house, the Senate building in your city or something, some required physical presence. So, that's what I like to do. That's what I look for. That's the long-term trade for me, because what I'm looking to do is just like the bankers and the government, they take advantage of this and they have the wealth transfer their way. Well, they're accumulating gold and silver. So I just think you should do what the smartest guys in the room are doing for themselves. And this is how wealth transfers.
Sure, and it's very important what you just talked about, because I wrote an article specifically about that, showing mathematically and in numbers what would have happened if Warren Buffett's cash hoard at Berkshire was sitting in gold instead of in cash for the past 25, 30 years, and how much his shareholders would have been better off if all of that cash, liquid cash, waiting to be put into use in the stock market, would have been in physical gold and silver instead of in dollars. And obviously, when you're working with tens and now hundreds of billions of dollars in cash, the difference is massive. So on top of that 2-year period, on top of that 24 months that I keep for the hedge, you're telling us to keep an extended amount out of cash and in gold and silver so that you can convert it into cheap income producing activities. And obviously that is something that I do personally, and many other people do that as well. They're basically waiting for a sort of scenario that benefits the enlightened in terms of how debt monetary cycles occur. Obviously, with that speculative position, because this is in order to capitalize on the situation, you have to maintain a very long-term outlook, because hyperinflation doesn't happen every year, and so that is why there's a very sure exactly, and that is why there's a holding cost, a holding period where gold doesn't produce any yield, any interest. In fact, it can be counterproductive in terms of holding costs and storage fees if you choose to hold it in third-party vaults, etc. But the cost, the opportunity cost of it can be worth it if and when a major event happens, and that is the entire speculation and bet behind the trade. I want to move on with you.
Can I just add a little bit more to that? Because its most important function is really to protect wealth. So it doesn't have to pay you anything because it is the safest asset in the world. It's why central banks accumulate it for these crises. So it is working for you. It doesn't have to pay you because it is that safe.
Sure,
it's not
in the same way that an insurance
not
policy does not pay you until something happens. It is exactly in the same manner. You pay a premium, you're insured, and if and when something happens, you're able to basically get everything back. In terms of gold and silver, it's even better because you get everything back and more, because other things are depreciated in a crisis much more. I want to move on with you to a very important trend that is not reported in the mainstream media. It's hardly reported in the alternative media, and that is the fact that President Trump just vocally and openly criticized the Fed. That has not happened in many decades, that a president says, I want low interest rates, I don't like the fact that they are raising rates, I want to protect the exporters, I want a weak dollar. Here's what's going on in China, here's what's going on in Europe. They're not raising rates, they're not tightening in Japan. Why are we tightening? I want low interest rates. I want to win a currency war by debasing. I have an artificially high currency anyways because everyone else is mandated to hold it. I want to keep cheapening the US dollar. And obviously the Fed came out and said in return that what Trump says does not have any bearing on how we independently think about our monetary policies. What do you think of this in terms of presidents, in terms of a new policy, a new bulldozing of the Fed's independence? Are we seeing the first glimpse of public scrutiny or public talk about the Fed? Because when the president talks about it, it's not like a commentator talks about it. It can become mainstream news very easily. And if I'm going into the head of Donald Trump, I think he's trying to hedge himself. If the economy does well, he takes credit. If the economy does badly, he can say, hey, I told you we needed low interest rates and not high interest rates, and then he can basically blame another institution instead of the federal government and its fiscal policy. He can blame monetary policy. What do you think of this entire situation? Because this is breaking news and nobody's talking about it thus far.
Actually, it's really interesting that you brought it up because that is exactly the topic that I'm working on for next week in one of my videos. So I am very well aware of it, and there are a whole bunch of issues around it. Because the day before that whole issue broke with Trump saying that he wanted the interest rates low, etc., you had Larry Kudlow on CNBC saying, the big shocker is the 2018 economic boom. So on the one end, and some of the data that I pulled because of, look, they change the rules. That's what always happens. When they want something to look a certain way, they change the rules. So you have Larry Kudlow saying the economy is doing great. Why? Because they just changed all the tax laws. You've got corporate profits that are going into the stratosphere. Now, I haven't crunched these numbers yet, but I did pull this data, this morning. And so let me see if I can remember. I could be off a little bit. But since the bottom of 2008, and I'm talking about in terms of corporate profits have gone up 231% since their bottom in 2008. Did you get that? Corporate profits from the Federal Reserve, Fed, have gone up something like 231%. So when Larry Kudlow says that, this is the best economy ever, 2018, that's the best kept secret, well, that would be an accurate thing for corporations. Also, for the investors, so the 1%ers typically who actually hold the individual stocks, the other part of that is, and you guys might recall this, that this is like the best time for those shareholders because wages, even though we're now at the lowest level of employment, you have wages that are not certainly keeping up with that inflation. And we do have inflation beginning to spike, which this is the reason why I wanted to talk about it in the term monetary velocity, which is where I think we're going to see hyperinflation begin to kick into gear easily. I've been monitoring that very closely because that's also taken a turn up. So while I'm not ready to go 100%, I believe that we have entered that melt-up phase. I wouldn't sit here and say that we haven't begun to enter that melt-up phase. Therefore, when you have President Trump saying how great that he needs some help and wanting the interest rates to stay down low, really how did all of that happen too was on a sea of global debt, of unpayable global debt. When they lowered those interest rates all the way down and kept them there for the last 10 years, or more now, what they really did, rather than governments and corporations and individuals getting rid of their debt or converting it into lower cost debt, some that were able to do that certainly did, but they didn't get rid of the debt. They just accumulated more because at that lower interest rate, their payments remained the same. But now they're sitting on this huge mountain of debt that has to reset into what President Trump is complaining about, a rising interest rate environment. So whether it's emerging markets or whether it's corporations here, all the leveraged loans, you've got seniors at the highest level of bankruptcy that's ever been seen. They're going bankrupt at higher and higher levels. And this mountain of us aging baby boomers, of which I'm one, although I don't plan on retiring, but of those aging baby boomers that, need to generate income. So they actually need a higher interest rate, presuming there's any value in the fiat, dollar, or any purchasing power value in the fiat dollar. So I think that there's a couple things with his comment on that. I think a lot of it is because President Trump knows the mountain of debt that is now coming due, and it's going to be harder for these corporations and individuals to service this debt, which means there's a default that's going to happen. Excuse me. And it's all of those bets, the derivative bets on the credit quality and of all of those issuers that could get out of control and would not, perhaps, it would get too expensive to bail. Well, first they'll bail in but then to bail out. It could get too expensive to bail out. There's just too many things coming due. So I think that's a lot of what President Trump is seeing is this debt that's coming due, and it also costs more if it, for new debt. And since that's what our system's based on, debt and credit, rising interest rates in this environment has not ever been done before, and certainly not successfully, and winding down the balance sheet and, doing less QE. They haven't stopped QE, but that's money printing. But doing less of it and transferring all of those purchases onto the public. I mean, there's a lot of weight that's now on the general public to carry these markets, whether it's real estate, the first-time home buyers are supposed to carry. I mean, are you flipping kidding me? But, there are a lot of things that I'm coming up with and I'm reading about counting on the individuals. You've had, look, the bond auctions, the debt auctions that the U.S. has just had are, basically they're pretty much failing. They've got the lowest bid to cover ratio, which means demand is waning. Well, who's buying the government debt? Well, pension plans, mutual funds, ETFs. Who is that? John Q. Public that has no idea what they're doing. So they've used this time since 2008 to transfer that risk, but now the problem is that rather than markets, whether they're debt markets or credit markets or whatever these markets are, rather than them being supported by a broad array of players. So, corporations, individuals, governments, managed money. Okay, so if everybody's participating, then there's a way to spread that risk out. We've gotten to the point in this trend cycle where if it's housing, that's supported by first-time home buyers, which is craziness. If it's government bonds, governments issuing debt, they want the public to be the one that's going in and buying all of this at the time when they've got the highest debt levels ever, because they're trying to sustain a standard of living. They're not saving money. Their savings levels are near the lowest levels ever in history. And the only way they're making it is by taking on more debt. Well, that's got to stop at some point. And if it's just left up to the public to support those very, very heavy markets that have been, weighted down with leverage and debt and hypothecation, which means, just more and more leverage. I mean, that really is the real asset, if there is one, is buried so deeply amongst these garbage contracts that when this thing erupts, you better have, for me, I don't have just a little bit of gold and silver, because I am so clear on what I see coming that, and I'm not saying that everybody should do this, everybody's got to do what they're comfortable with. I'm way overweighted in that area because I know this is going to happen. I can't tell you it's going to happen tomorrow, but I can't tell you it's not going to happen tomorrow. This whole system is so leveraged and so fragile. Nobody doesn't want the interest rates to go up. It threatens this house of cards. It prevents this house of cards from going even higher. But there will be a wind that will knock that house of cards down. And when that happens, you need to have food, water, energy, security, barterability, wealth preservation, and community. The barterability and the wealth preservation, that's what you do with the gold and the silver. Barterability, though, for those viewers, not everybody has enough to do it with, although silver is certainly ridiculously cheap at what, 15, 16 bucks an ounce, give me a break. And even gold, I mean, you can get fractional gold for a few $100. So it's not really that it's cost prohibitive, but I want you to understand, in the barterable world, anything that's physical, any talent you possess is barterable. So if I have strawberries and I want blueberries, okay, if you want strawberries, we swap. But if you don't want strawberries and I have to go out and find somebody that wants strawberries, that has what you want, okay, my strawberries are going to be my chicken food here, and so will the blueberries. So gold and silver is indestructible, and it's universal. But any talent, anything, toilet paper, actually is quite a good tool of barter during these periods of time. So that's how, I'm sorry, but that's how I feel. You got me when my head was buried in that issue.
Sure, no problem. And I want to ask you, Lynette, the trade wars with China, and Fed Chairman Jerome Powell, he comes out and said this is the biggest threat to growth in America. Is this justifiable, or is this overhyped, underhyped? Where do you see the entire scenario?
Well, for one thing, the way that global trade has been set up, and particularly once China joined the WTO in 2001, we have given up, our countries have given up their sovereignty. And remember, governments are supposed to represent the people, and handed a lot of that power over to the corporations that, some of these are even bigger than countries. So we definitely had to change the rules, no doubt about it. Is it overhyped? No, I'm not 100% convinced personally that this is really a them against us. I think that this could possibly be being used to hide the rapid inflation that central bankers have been calling for. So I kind of have a bit different view on it. They're two central bankers and treasury secretaries globally are really interconnected and creating relationships through the IMF forever. And we've been talking about, when we just look back since 2008, a globally coordinated this and a globally coordinated that. So we've also witnessed where central bankers were acting in their own countries best half, the Swiss surprise, the Chinese surprise in 2015. But the trade wars definitely have an impact. It's going to have an impact on pushing prices up a whole lot faster. And that could be used to hide the real agenda. I'm not sure. This is not something I can prove, but the monetary velocity chart seems to be, it's going up, and it seems to be getting more pervasive, which is what I've been looking for, meaning that prices are moving up and money is changing hands more rapidly. We'll see it. The monetary velocity chart of the Fed is what I use. But yeah, that's how I feel about the trade wars. I think it's going to cause a lot of pain globally. It could definitely create some eruptions globally here, the emerging markets, China. And it could be the tool to justify the reset.
Now, I want to ask you about a recent discovery that I made while I was in California, researching this through back channels and through official channels. And it looks like about 12 states out of the union are trying to create a loophole where they would be able to create their own currency to bypass the federal budgets that they need to create some projects, and they can issue those currencies aside from the dollar, basically bypassing the entire Federal Reserve System, and back their currencies with these states projects. And we're talking about three of the major GDP providers for the U.S. So California, Illinois, New York, they're all starting to make this happen. California being the leader in this. And this is not on any mainstream or alternative media yet. But if California is able to pass that and legislate this, and they're in the process of doing this, this could be an overnight event where the largest GDP contributor to the federal government has their own currency, a state-issued currency. And I want to ask you, we're seeing a lot of division in the U.S. right now between the haves, the have-not, the wealthy, and the people that are not wealthy. Charlie Rose, when he interviewed Buffett and Gates last year, this was one of the topics that Buffett talked about. He said, look, on the one hand, we have a market system that generates exceptional results for the entire community as a whole. But since it's so specialized today, the wealth is concentrated to less and less hands, and we have displaced workers that are hard. It's hard to retrain them when they get to be of age, and there needs to be some sort of a solution that goes back to the fundamentals, because our monetary system, our free enterprise system, will keep producing wealth in general, but it will get concentrated to fewer and fewer hands, and this is obviously causing division in a country that used to have a robust middle class. One, how does the U.S. move forward in terms of their economy to help the middle class, or to help displaced worker, to help the retirees? Can they afford to do so? And if not, then where does the rubber meet the road here?
Well, wow, that's a big mouthful. But I want to start at the beginning of that question where you talked about California, Illinois, and New York. All three states that are, really probably have the highest tax brackets, state tax brackets, as well as, I don't know this for sure, but my bet is the highest debt levels and the highest pension obligations.
And they're not Trump lovers, for sure.
Well, whether they are or not, I mean, they still are, where they are. So by issuing their own currency, that's then backed by revenues from those projects? Don't they have revenue bonds? So that's kind of interesting. But yeah, I think these states that are so heavily indebted, I'd have to see what they're going to do with their pension plans. And when you look at their property taxes, which is actually one of the biggest risks during resets to real estate, which is why you need to have that barterable gold so you can maintain that real estate. But if you can't pay your taxes, you lose it. I did a little study in Illinois on these pension issues maybe 6 or 8 months ago. And based upon the rise in their property taxes, I just used even the manipulated spot market in gold, and damned if gold didn't maintain its value so that in nominal terms of dollars, your taxes tripled. But if you had bought it and held it and sold it as you needed it, your property taxes did not double or triple. So it'll be an interesting experiment, and I'm going to look into that and get and see what their excuses are. So that's the first part. Then the second part, where you were talking about the divide between the haves and the have-not, the income inequality. We're actually experiencing that on a global basis, where you have, in Europe, you have the populist movement. And in this country, that's how President Trump got elected. And you've got Brexit. So, and you had the Arab Spring. So and you have a lot of issues in China is really kind of an interesting study on that, because as things get worse, and the trade wars may certainly justify things getting harder for the population, and the Chinese government's level of surveillance and control over corporations, universities, and individuals. What I've been reading about from some different sources is that there's a lot of unrest there as well. So I think that what we're really looking at here is more of a global phenomenon because, again, the whole system, the fiat money system, unlike gold, whose most important function is to protect your wealth, the most important function of the fiat money, and fiat means by decree, so that's the legalized government money. And its most important function is inflation, which guarantees that it loses value over time. So even attempting to save it for future use, which is a key component of what makes a good money, that will not happen in terms of, in this country, dollars, but in other countries, yuan, euros, whatever, it doesn't matter. We recently in this country in April, we finally broke, according to the Federal Reserve, below 4 cents of value out of the original dollar. Since then, if you look at the graph, I just published this one yesterday, breaking the strong dollar myth, you'll see the dollar over this past year has been plunging, but it's really been plunging since the central bank took over. So, when you get to zero, where do you go? Oh, negative. Then you attack principle. That's where we are. That's what that whole big experiment in Europe is. So how much of that do you think people will tolerate? How do you cage a wild boar? You put some food out, so you allow them something. And after a while, they just get used to always having that food in the same place. They come and eat, and then you go and you put a side of a cage on there. Well, they're nervous at first, but once that side's been there, and since that food is there every day, they learn to just ignore that side, and then you put the next side up. And ultimately, on that last day, they're just inside of this 3-sided pen eating away, and it's real easy to put that 4th side up there. And that's what inflation really does. You think that your income is going up because it is in terms of dollars, but the value of the currency that your tool of barter that you have to work with and you're saving is going down. So, is your house really worth that much more, or is the dollar really worth that much less? So at some point, when people are hungry and hopeless, that's when they start to make choices they would not otherwise make. The central banks and the elite are aware of this. They have been aware of this really since, I think about 2010. I could be off on that date. I don't really remember. But I know that this is an issue that has been coming up over and over and over again because the American dream has become a myth. Used to be a reality. You could come to this country wherever you came from, and with your, ingenuity and your sweat and your blood and your drive, you could build a really wonderful life. Well, that's since the advent of all of these fiat markets and the advent of all of the derivatives and leveraging everything that's physical, turning everything into a financial product. Well, guess who wins? The finance companies, the guys that write those contracts. Not you or me. They don't want us to own anything. So, even moving forward, the easier it is to buy, sell, and trade an asset or an instrument, say, the equity in your home, the easier, the more likely you are to spend it, to get rid of it, to use it, what have you. And then you're volunteering and you don't even know it. But at some point, and we're very close to that point. All over the world, we're very close to this point where there's a lot of unrest in the 99, well, not the 99%, but probably the bottom 60% anyway, 70%. There's a lot of unrest because prices are going up, but their incomes are not keeping pace, which goes back to what we talked about in the very beginning, in that, this is a great environment for corporate profits because inflation is gauged on their products that they produce. So, and they're not paying, even though you've got, or at least the reported employment is at the lowest levels. you are not really seeing much wage inflation, but you are seeing price inflation. So corporations can make more profits on the backs of the individual. At some point, that weight is too heavy and they will rebel. And I don't know exactly when that's going to happen, but it always happens. So yes, it will happen.
Now, Lynette, where can people get in touch with you, and if they need advice, consultation, anything that has to do with buying and selling silver or gold, or building a strategy that you do at ITM?
Yes, well, they can always give us a call. I mean, we really have a very powerful team. We're all on the same page. We work together, quite diligently always. And so they can give us a call at 888-696-4653. We have our YouTube channel, itmtrading.com, and we publish work on that channel 3 times a week at least, or more. Of course, we've got the blog, and we also have Facebook and Twitter accounts. So we're very active, very busy. We are all here to be of service, and we are all here. Our mission is to really help people and educate them, and it's not just so we're fishing for you. If you work with us and you take advantage of what we bring to the table, we want to give you the tools so that nobody can ever pull the wool over your eyes. So yeah, everything we do is with physical gold and physical silver. We believe very strongly that you need to have it in your possession for what we are needing to deal with. But 888-696-4653, and I think you'll like us. We're all real smart.
Hey, Lynette, thank you very much for taking the time today.
It's been fun, Lior. This was a really good conversation. So thank you.
Thank you very much, and we'll definitely have you back on.
Absolutely. You take care now. Bye-bye.